Because I used to be an extreme skeptic of Bitcoin. Like kind of Peter Schiff, I used to think gold was king, that Bitcoin was a waste of money in the economy and it should go to stocks and people will be better off, things like this. However, after doing, I think everybody who's like that, like me, who used to be a skeptic, once you do some research, what I think Michael Saylor says this is if you haven't done 10 hours of research, don't be a skeptic. Do 10 hours of research, and then if you're still a skeptic, fair enough. But, I used to be a skeptic anyway. And, now I think it's actually the world's greatest asset class. And I 100% believe in this. I think, people who own Bitcoin now, even at the price, what today, like $115,000 a Bitcoin, 20 years from now, I think we'll be laughing, it was cheap as anything, cheap as chips. But yeah, so I'm going to be talking about Bitcoin. Just to let you know, this isn't financial advice. Take it with a pinch of salt. Just me, just some random bloke on the internet chatting about, Bitcoin. But yeah. So for people who don't know the story, the origins are it was founded in 2008 by Satoshi Nakamoto. This is a pseudonym, so we don't actually know who it is. Many people believe it's Hal Finney. That's the most likely person. However, I think the fact that people don't know and that the biggest crypto wallet in the world is Satoshi Nakamoto's and it's never been touched. I think this is, what adds to the story of Bitcoin, how it became popular, And I think if it was somebody we knew who had created it, it wouldn't be, it wouldn't have the same effect. It's the first digital money to overcome the double spending problem. So there was digital monies before this, in the 80s and things like this. There was a few digital monies created. However, the main issue with them is double spending. So so Bitcoin is decentralized. So there's no third party to make sure that I don't give my £100 to somebody else and then give £100 to somebody and then give £100 to another person, because if it's digital, I can just copy a file. If I send somebody a PDF, I still have that PDF. I can send it to another person, things like this. So Bitcoin's the first digital currency to overcome this by having a proof of work system. So this is when new Bitcoins are created and rewards are for when miners verify transactions. What verifying transactions means is basically solving extremely complex math problems with computing power. That's kind of the idea around it. I don't want to get too technical with it. I'm not too technical myself, but it gives you a general idea of how it works. Bitcoin is scarce, right? So if you think back to your high school economics class, walk straight in. What does the teacher ask? Why do you want to do economics? Things like this. What is the definition of economics? A lot of people think, money. I hear people say things like that. The teacher, it's the study of scarcity, right? Because we have to manage a certain amount of resources in society. And that's basically what economics is. And, there's not actually that many things these days that are scarce. Bitcoin is really the only thing where we know exactly how much. There's going to be 21 million Bitcoin ever, right? So we're like at 19.7, I believe, at the minute, 2025. So, that's it. It's not like gold. Gold is scarce, I believe, but, we can mine 1 or 2% a year. The US dollar is not scarce at all. Any fiat currency is not scarce. The government, if the government can print double the amount in a day, or just print billions like they do already, it's not scarce. And then, another thing with Bitcoin is that the block's half every 4 years, making it scarcer. So, back when it was started, each Bitcoin, when you did proof of work, you'd be rewarded with a lot more Bitcoin, obviously. But, as time's going on, every 4 years, approximately it halves. So the Bitcoin you mine now, it's about 1.325 Bitcoin, which is a lot less, obviously, than 50 back when it started. And then every transaction is recorded on a public blockchain, which is, it's there. You can't erase it. You can't go back. It's there. That's kind of the idea of what Bitcoin is. So as I said before, there's about 19.7 million Bitcoin mined so far, 2025. So as I mentioned before, the amount of Bitcoin mined now is less. So for us to reach 21 million, it's expected to be around the year 2140. So I'll definitely be dead by then. But yeah, so it goes a lot slower basically. And then the halving process caused less coins to come online, while also the demand for the coins is growing, as well as this inflationary pressures of the fiat currencies drive the price of Bitcoin. So, with the dollar, if you think back to COVID, I think that's a really amazing, interesting time for everybody, because especially in the financial markets, because about 40% of the M2 money supply was created in COVID, really. Like the government just, and the way it was created was giving it straight to people's hands, which is, it's different than printing, infrastructure, things like this. If you give it straight to people, it's going to have massive inflationary pressures. And yeah, but this is what drives the price of Bitcoin. So here's an interesting statistic. So, people who have read the book about the Federal Reserve, The Creature from Jekyll Island, highly recommend that book. But, over the past 112 years since the Federal Reserve was founded, the US dollar has lost 97% of its value, which is astounding. So, if your grandparents, if your ancestors left you $100 112 years ago, that's nothing now, and that's based on just like the CPI and things like this, and that's why assets are key, because if they left you land, that land would still be land today, and it'd be obviously worth the equivalent in today's terms. And this is why Bitcoin is an example of why Bitcoin is important, because you can't hold on to fiat currencies. You can't leave money in a bank account and just let it sit there, earn no interest, get eaten away by inflation, the so-called CPI things. You can't do this. And here's a little quote from Michael Saylor. Bitcoin is money, everything else is credit. And he's the CEO of Strategy, for people who don't know, previously called MicroStrategy. And they're one of the companies who invested a lot of money in Bitcoin, and they've done extremely well because of this. So Bitcoin is money, everything else is credit. What does this mean? Well, Bitcoin, credit is basically, dollars, things like this. They're not valuable. We give them value because we accept them for payment, things like this. But Bitcoin is actual money. To me, money is a store of value. That's something you learn in economics class. Fiat is not a store of value. You can use it for transactions, but it doesn't hold its value. Here's a little interesting statistics for people. So, 24 and a bit, 25% roughly of the global adult population are unbanked. So what is it? So if you think about, Africa, South America, Asia, a lot of these continents, not Europe, but other continents, they're developing. Not everybody has access to banks like we do in the US, the UK, things like this. It's so easy for us to set up a bank account, but for people who live in rural areas, they don't have these luxuries that we have. So this is where Bitcoin comes to itself, because if you're a small if you have a little market stall in Congo, right, and you want to sell things, you can't use card if it's something, if it's a small transaction, the transaction costs are just going to be too high. Whereas Bitcoin, this is the amazing thing about it, you can just send some money to anybody anywhere in the world with a Bitcoin address, and there's no third party taking 1%, 2%, things like this. It's not like that. That's what's so amazing about it. Another interesting statistic: about 15% of the keys in the world, so between 11 and 18% estimated, are gone forever. So this is basically, if you have a Bitcoin, you store it on a cold wallet, so not online at all. You have a passphrase, a 12-word passcode. And if you forget this, that's it. They're gone forever. So out of the 21 million Bitcoins around, let's say 15% of those are gone forever, wiped out. So there's actually less than people realize. And then the world population, it's only estimated that 1.29% of the whole world owns any Bitcoin at all, which is nothing, right? I mean, look at the price of Bitcoin from 2008 when it was founded to now. It's gone up loads. That's only 1.29% of the world that owns it. So if this changes, Bitcoin could just be an amazing investment. Now, the asset class that Bitcoin is often compared to the most is gold. I just want to say that I am a massive fan of gold. I believe that gold, Bitcoin, I think I like to have um, a diversified portfolio. However, I do think Bitcoin does have an edge over gold in many areas. So, Bitcoin is digital and decentralized, whereas gold is physical and tangible. That's pretty obvious. And the Bitcoin market cap is, oh, sorry, the amount of Bitcoin supply is fixed at 21 million, whereas gold, as I said before, grows at 1 to 2%. Bitcoin involves cryptographic proof and public blockchain. Gold does involve physical assay and testing required. One Bitcoin is divisible into 100 million Satoshis. So what does that mean? That means that you can own, a $1 worth of Bitcoin, things like this. Whereas gold, I couldn't own a dollar worth of Bitcoin. Sorry, I couldn't own a dollar worth of gold because it's difficult to divide precisely. It doesn't really work like that. You can divide it into coins, but a coin now is what, I mean, over 4 grand USD. Bitcoin can be sent globally in seconds, whereas gold is heavy and it's costly to transport. Bitcoin has digital wallets, so I can have my Bitcoin on a ledger or think something like this, and it's like a little USB looking thing. Whereas gold, you'd store it in a vault. It would involve insurance, transport, things like this. Bitcoin is fully decentralized, so I have it. It's mine. Nobody else can touch it. Whereas gold is centralized. It can be seized by governments, institutions, things like this. Because for anyone who owns a large amount of gold, you most likely do not have it on yourself. You probably have it in a custodial vault in Switzerland or Singapore or somewhere or Canada, I believe, is another popular option. Whereas Bitcoin, you have it, nobody else, unless this is if you have it on a cold wallet, by the way. If you have it in your Coinbase, it's not fully decentralized. You have to have it in a cold wallet, safe. And there's no counterparty risk, whereas gold, there is if it's stored in vaults. Bitcoin is quite volatile, it's more volatile than the S&P 500, things like this, but that's just kind of the nature of it. Whereas gold is typically quite low, has low volatility, but before periods such as now where it's gone up significantly, it is quite a stable investment, and it doesn't go up or down too much. Bitcoin market cap as of today is $2.21 trillion, whereas gold is 30 trillion. So, it's about 15 times bigger, gold. And then Bitcoin exists indefinitely, whereas gold is physically indestructible. So there's the largest Bitcoin holders in the world. I think this is quite an interesting, thing to look at. So I think I mentioned before, Satoshi Nakamoto is the largest Bitcoin holder in the world. He owns 1.1 million Bitcoins, which is over 100 billion, I believe. So he owns the most. He was a founder. He mined quite a lot of it back when it wasn't popular. So, but that's untouched as well. So so it's never been touched. I think if it did end up being touched, that would cause a lot of panic. But that's that. So the Winklevoss twins, people may be familiar with this name. They're the two in the Social Network movie who were involved with Facebook in the early days. They own 70,000 Bitcoin. So a book worth reading is called Bitcoin Billionaires by Ben Mesrick. I recommend reading this. Just, interesting, back before Bitcoin was popular, that it talks all about the Winklevoss twins, learning about it, investing in it, things like this. Tim Draper, an American VC, 29,956 Bitcoin. Michael Saylor, CEO of Strategy, owns 17,723. Changpeng Zhao, 1,300. And then after this, I couldn't actually find who owns the most individuals wise, because it's kind of it's not really something known. They're anonymous accounts. You just see the wallets. But yeah, that's another interesting thing about Bitcoin. It's anonymous. So here's an interesting thing. This was I seen a tweet today by Larry Fink, or somebody tweeted a quote by Larry Fink today. He's the CEO of BlackRock. And he said that if every millionaire in the US wanted to buy one Bitcoin. So let's say every millionaire in this case is $1 million net worth. If they all want to buy one Bitcoin, 10% of their net worth, it's not possible. Okay, there's not enough Bitcoin around. So if you think about it like this, all these funds open up Bitcoin ETFs, things like this, growing demand for it. There's not actually that much supply out there if it goes mainstream. So that's why, if you own it now, if people invest before, they'd obviously do very well in this scenario because um, that would just, if 8 million millionaires in the US tried to do this by one Bitcoin, it wouldn't work. It even out to probably like point 2 or 3 each. And then if you expand this globally, 60 million millionaires worldwide, that's more extreme. Everyone if you own zero point 0.1 Bitcoin, you'd probably be absolutely minted. And now this is kind of where Bitcoin comes into its own because at the end of the day, banks aren't safe. So let's look at the global financial crisis in 2008, a massive recession caused by excessive risk taken by banks, mortgage-backed securities. People who've seen The Big Short, read the book, you know all about this. The collapse of Lehman Brothers and many other banks. Governments issued massive taxpayer-funded bailouts and printed money for the too big to fail. So if you think of like Bank to Scotland, I believe it was, or RBS, or one of those two, the government just printed massive amounts of money to bail them out. It's not fair on taxpayers. And this is what inspired Satoshi Nakamoto to create Bitcoin. So I think one of the titles of one of the newspapers was Chancellor on Brink of Second Bailout for Banks. Yeah. And then also in 2013, we have the Cyprus banking crisis, where Cypriot banks collapsed due to exposure to Greek debt. The government imposed capital controls, seized 10% of deposits. And people were locked out of their accounts for weeks. So if all your money's in a bank account, what are you going to do? How are you going to go and buy food, pay the rent, pay the bills? You're cooked. And then you also, another one in 2015, the Greek debt bank shut down. So this is a famous picture here of a poor pensioner, crying outside the bank because he couldn't get to any of his money. So they shut down for 3 weeks ATM withdrawals, and you could only withdraw 60 euros a day, and also imposed capital controls so you couldn't take your money out of the country. And obviously this is bullish for Bitcoin, and I'm sure a lot of people in Greece and Cyprus turned to Bitcoin after this because you don't want this to happen again. It's from 2008 to 2015. This is already 3 examples. It's not like a once in a lifetime thing. It's pretty common. Lebanon, there was a banking collapse in 2019 when the currency lost 98% of its value, and the banks froze dollar accounts, which prevented withdrawals, causing protests and chaos. And then this is my favorite by far here. So we have Silicon Valley Bank Run in 2023. So I'm English originally. However, I was living in the US in the Bay Area for 10 years. And just outside of Palo Alto. So I seen this with my own eyes when I was in when it was happening. It was quite something. So Silicon Valley Bank collapsed after 42 billion withdrawal wave in 24 hours, the fastest bank run in US history. Rising interest rates devalued assets, leaving it insolvent once depositors panicked. And then the government stepped in to guarantee deposits to prevent contagion. So, again, this is obviously 2008, and the measures imposed from this were still not strong enough to stop banks from going from collapsing, because this happened only 2 years ago. So this is quite spectacular. Even a lot of startups were bailed out fully, so millions of dollars. The FDIC insured amount in the US for a bank account is 250K. However, during this, the government just bailed out excessive amounts, millions and millions and millions to startups who had all their money in the bank. So what does this all mean? So it means that banks effectively aren't safe. I would never leave too much of my money in a bank account because because of this kind of thing. It can happen. And this is kind of why Bitcoin, this, if you have your money in Bitcoin, this can't happen to you. There's no third party with control over your money. There's no uh, dodgy bankers, to, doing God knows what with people's money. It's all there for you. You have control over it, which is a great thing. And then it's also, cold storage is a must. So cold storage refers to keeping Bitcoin completely offline and disconnected from the internet. This is done using hardware wallets, paper wallets, or air gap devices that store private keys securely. Because the wallet is not connected to any network, it's immune to online hacking, phishing, or exchange failures. So this man on the right, Sam Bankman-Fried, this guy, he's he's the face of why you should have a cold wallet. So he was the CEO and founder of FTX, which is the crypto um, brokerage service that went bankrupt a few years ago. Basically, just stole everyone's money, and that's why it's important, because people had money in their hot wallet, which is basically, so. For example, if I'm on Coinbase and I buy Bitcoin and just leave it there as if it's like a Charles Schwab account or something, that's a hot wallet. It's not really ideal. You want to have it in cold storage as like a ledger or a Trezor, which is fully offline. Nobody can touch it. It's there. It's yours. Um, and then long-term investors, hodlers, often use cold wallets for maximum security. So you'll hear a lot of people say hodl, which means hold on for dear life. It's a phrase that loads of Bitcoin fanatics like to use, and you know, yeah. So here's a little image I found on Twitter. It says Bitcoin is king. So I kind of agree with this. Uh, yeah, so Bitcoin is number one, gold, stocks, real estate, crypto, fiat. So it's worth noting as well, I don't even consider Bitcoin to be crypto. A lot crypto is kind of built around Bitcoin. Bitcoin is the first one, but to me, when last week when they said the crypto market had the biggest loss ever in history, to me, I don't think of Bitcoin. I think of all these dodgy coins that people are trading online and um, have no value and go up 50% one day and down 99 another. That's crypto to me. But yeah, gold, stocks, real estate, Bitcoin. They're what you need to have to be financially secure, I believe. And then I like this as well. I've seen this. So being rich is built on debt, people buying Gucci and things like this, and then cold storage, having loads of Bitcoin is true wealth. So yeah. And then this is going to be the end of it, but a few books that I think just throw out there so people can read. The Big Print, this really good book, kind of all about inflation. Bitcoin Billionaires, I mentioned this one before. Michael Lewis's Boomerang. So this is kind of, he goes around like Iceland, Greece, all these countries during 2008, during the global crisis, and reads about, discusses